everyone. Welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial on the web at elevationfinancial.com. All right, 2026 is right around the corner, and welcome to the most boring episode of the year, which is where I'm going to run through some updates in financial numbers, things like retirement account contributions. I'm going to keep it short. I'm not going to list off everything just because it's much easier if you go to the blog post version of this episode and you can see it all there along with a nice downloadable cheat sheet that you can keep in PDF format that has all the numbers in it. But I am going to highlight some things because my point here is to make sure that you are aware of these updates and you can plan for those things. So we're going to go through a few updated numbers for 2026 and how that might affect you. So let's jump in first with retirement plan contribution limits. So the IRS typically updates these contribution limits every year. And for 2026, for things like 401ks, 403bs, and 457 plans, the contribution limit for 2026 is $24,500 if you are under 50. If you're 50 or older, you can make additional catch-up contributions of $8,000, which brings the total potential employee contribution to $32,500. A lot of people don't know this additional information, which is there's a special provision for those age 60 to 63. And if you fall into this age range, you can contribute an extra $11,250 as a catch-up contribution, allowing for a total of $35,750. So that little 3-year window, some people don't know about that. Also, traditional and Roth IRA limits have been increased to $7,500 in 2026, and the catch-up contribution for those age 50 or older is now $1,100. So if you're over 50, you can add that catch-up contribution for a total of $8,600. All right, Roth IRA income limits have also increased. They went up a little bit, so you can make a little more money before you phase out of eligibility for Roth IRAs. So for single filers in 2026, the phase-out range starts at $153,000 in income and caps out at $168,000. For married filing jointly, the range is $242,000 to $252,000. So if you start to reach income at the bottom of those ranges, you start to phase out of your eligibility for a Roth IRA. So if your income is over those limits, you can't contribute directly to a Roth IRA. However, you can also potentially consider a backdoor Roth IRA conversion if you qualify. There's a lot of caveats, things like the pro rata rule. So just be aware it's complicated, but that may be an option for you. All right, traditional IRA deductibility. If you're covered by a retirement plan at work, your ability to deduct traditional IRA contributions might be limited based on your income. So for single filers, the phase-out range is $81,000 to $91,000. For married couples filing jointly, it's $129,000 to $149,000. If only one spouse is covered by a workplace plan, the non-covered spouse can deduct contributions up to the phase-out range of $242,000 to $252,000. So those have been updated as well. SEP IRA and Simple IRA limits have also been updated. SEP IRA contributions can go up to $72,000 in 2026, or 25% of compensation for employees. And Simple IRA contributions increased to $17,000 with a catch-up contribution of $4,000 for those age 50 and older. For those age 60 to 63, they can contribute an additional $5,250. All right. Federal income tax brackets have also been updated. I'm not going to list them all off because there's a bunch and it would just be not practical podcast, but be aware that income tax brackets have been updated a bit. The bulk of income typically that for clients I work with, it's kind of 22 to 24% tax bracket marginal. That's kind of where we see a lot of income end up, and those have been updated. So 22%, for example, ranges from a little over $50,000 to a little over $105,000. And then the 24% tax bracket, again, is for single filers, is a little over $105,000 to a little over $201,000. And then for married filing jointly, also ranges have been updated. 22% starts at a little over $100,000 and caps out at a little over $211,000. And then the 24% tax bracket is a little over 211 up to 403. So those ranges have been increased a bit for those marginal tax brackets. For the full list of tax brackets, again, look at the cheat sheet on the blog post. That'll give you a visual of everything. The standard deduction, that has increased to $16,100 for single filers and $32,200 for couples married filing jointly. So that's been updated as well. Also an update for those age 65 or older or blind. Again, look at the cheat sheet for those as well. Long-term capital gains tax rates stay the same at 0%, 15%, and 20%, but the income thresholds have shifted. So take a look at the cheat sheet as well. I'm going to not list them all off, but go take a look at the new long-term capital gains tax rates and where you might fit in on those brackets. HSA, one of my favorite accounts. HSA limits have also increased. For individuals, the contribution limit is $4,400. And for families with a health savings account, it is $8,750. And if you're age 55 or older, you can contribute an additional $1,000 as a catch-up contribution. As a reminder, to qualify for an HSA contribution, you've got to be enrolled in a high deductible health plan with a minimum deductible of $1,700 for individuals or $3,400 for families. So make sure that your health insurance plan is HSA eligible before you make a contribution. All right, gift and estate tax exemption. The lifetime gift and estate tax exemption, rises to $15 million per individual in 2026. And the annual gift tax exclusion for 2026 is $19,000 per recipient. This means you can give up to $19,000 per individual without triggering gift tax reporting requirements. Doesn't mean you necessarily pay gift tax, but that is the threshold for reporting. The Social Security wage base increases to $184,500 in 2026. Cost of living adjustment, for benefits is 2.8%. And if you're still working and receiving Social Security before reaching full retirement age, the earnings limit is $24,480. If you're in the year you reach full retirement age, the limit is $65,160. Once you reach full retirement age, there's no earnings limit. All right, so those are a few of the highlights. Again, the most boring episode of the year where I list off a bunch of random numbers. But why do they matter? Well, if you're trying to max out your retirement accounts every year, this gives you more room to do that. If perhaps your income previously was too high to contribute directly to a Roth IRA, that may have changed this year. So these numbers do matter. It could change your eligibility for certain accounts. It could change how much you can contribute. It could change your tax brackets. A lot of things could shift and open up new opportunities or at least uncover issues to think about and be aware of as you plan. So take a look in 2026 how these numbers affect your financial plan and your strategy going forward. So for example, the new tax brackets create opportunities for Roth conversions or tax loss harvesting, or perhaps contribution options for different accounts. Are you on track to max out those accounts? Things like HSAs, for example. So little adjustments can make a difference. So take a look. Again, go to the blog post version of this episode, grab the cheat sheet, and take a look at where you might end up with some of these numbers and what that uncovers for your planning opportunities. All right. As always, you can find me on the web at elevationfinancial.com. And again, thanks for listening to the most boring episode of 2026. But again, the numbers are important. And this is also the last episode of 2025. I said that wrong. I said the most boring episode of 2026. I meant the most boring episode of 2025, where we're talking about numbers for 2026. Anyway, enjoy the holiday season. I will be back in January. And as always, have a great day. See you next time.